To remind that the topic of the first session, before giving the floor to Pablo, is about the role of the securitization in the financing of the European economy in the coming years, and to try to discuss what are the needs, why do we need securitization as an essential element of the capital market union, like Jean Lemierre has underlined, and what are the objectives in terms of development of this new disposal. Pablo, I give you the floor, and thank you very much for this partnership.
Thank you very much, Arnaud, for that introduction, and thank you very much to Chairman Lemierre for your opening remarks. Well, let me take a moment to say on behalf of AFME to welcome our distinguished speakers and the participants in the room here in Paris, and also following us through the live stream. We're delighted to collaborate with Paris EUROPLACE on this event, which we specifically wanted to do in Paris on this occasion because obviously France is holding the presidency of the Council of the EU, and it is a very important member state when it comes to securitization, Europe's securitization market. Let me just say, AFME has, of course, been a long-standing supporter of the European securitization market. We have a dedicated securitization division headed by my colleague Sean Badley, and which represents the broad industry. So banks, investors, law firms, CRAs are part of the division and form the positions of AFME on these issues. You should have received a presentation this morning with our views on several debates, if you want to look at those. Just by way of introduction to the discussion, according to our latest analysis, the securitization market in Europe continues to be subdued. So over the past decade, European placed volumes have fallen from being 20% roughly of the US to 5% today, with more than 50% of new issuance still retained by EU originators. So we're talking about a market that is really a shadow of the pre-crisis levels. It has not recovered with the arrival of the new framework that has been live since January 2019, the new framework for securitization and simple, transparent, and standardized securitization. We have seen that this framework has been accepted by the industry, has been supported by the industry, but it has so far not led to a significant increase in issuance levels, and importantly, has not grown the investor base in Europe. So what are the factors behind this state of affairs? I think some participants may refer to, for example, macroeconomic factors and central bank policy and access to cheaper sources of funding that have made securitization less attractive. That could be one. That is one factor certainly playing a role. Is it also stigma on the part of EU investors, having had a bad experience in the subprime market? Is securitization kind of permanently tainted in the eyes of investors? Another question. Or do we see the regulatory framework playing a significant role here? And we will not be surprised that that's I think where AFME puts a lot of emphasis at the moment. As Jean Lemierre was explaining, for securitization to work, the economics need to work for issuers and investors. There need to be incentives, and we currently see in the very conservative regulatory framework that we have post-crisis, a lack of incentives, a lack of proportionality for both issuers and investors to participate in this market. So those are some of the issues that we would like to see addressed in the current review of the framework. So with that just intro, let us turn to our distinguished panelists. I will welcome them as I introduce them and give them the floor. So let us start with the two panelists joining us virtually. I'm delighted to welcome Elizabeth McCall, member of the supervisory board of the ECB. The ECB, of course, being a key player in the securitization market as a supervisor, as a market participant. The opinions of the ECB are very important also in the development of the framework. So we're delighted to have Elizabeth joining us. And let's start with you, Elizabeth, and with some questions. As has been said, securitization is a key pillar of the capital markets union. We all know Europe is has an economy heavily reliant on bank financing, but we need more capital markets, and securitization can really be a key link between the bank lending and the capital markets to distribute risk. So I would welcome some reflections from you on what role do you see securitization playing in the European financial system, keeping in mind the challenges that we have, the economic recovery from the pandemic and the current economic situation given the war in Ukraine, the green transition. So I would welcome your reflections on securitization's role there from a funding perspective, but also importantly from a financial stability perspective, because that is an angle that certainly you reflect on. So I would welcome your reflections on that.
Thank you, and it's a pleasure to be here with all of you. This is indeed an extremely important topic, and may I just say, parenthetically or by way of background, yes, I sit on the supervisory board of the ECB. I'm the first American to have such a seat. So I'm going to bring a little bit of a perspective that the chairman also referred to in his opening remarks about some of the differences in the two markets. And may I say quite directly up front that I am a proponent very much of bringing about more depth and breadth to the securitization market. And your question is very well placed. If we think about the moment that we are in right now, and we look at the overall economy, and we look at what the challenges are that the banking industry will face, what citizens of Europe will face over the coming years, it's true. We can say that we're facing enormous challenges in the not too distant future in terms of financing needs across the European economy. And maybe in particular, and Anne, I'm sure will touch on this from the Commission's perspective, but if I look at one of the greatest challenges that we're facing, it's the transition coming from climate change that we have to go through over the next years. And if we look at the green transition, and then we add into that what's happening in the banking industry with respect to digital transformation, which is emblematic of what's happening globally in the financial services market, we have estimates coming from the Commission that there will be a need for additional public and private investments of almost 650 billion euro per year until 2030. So the financing needs alone are a driver for a need for more depth and breadth to the capital markets, and that can definitely be delivered by securitization. We need private funding via the capital markets. It's essential to meet the green and the digital investment needs. It's essential to financing innovation. So from the ECB's perspective, we certainly welcome measures to achieve more integrated capital markets across the European Union. We also fully support the full and the swift implementation of the Commission's 2020 Capital Markets Union Action Plan. Now, I said at the outset that I have this maybe a little bit unique perspective on the supervisory board as a US citizen. It's worthwhile to make just a very quick comparison to the US, where the capital markets play a much more significant role across the financing needs of the marketplace. It has implications for the financing of the overall economy and the needs and the challenges that are coming in the years ahead. But it also has challenges and opportunities for bank profitability. Banks earn more fees in the intermediation between corporates and the capital markets as part of their overall income producing when we look at that. Even for loans to households, notably for mortgage loans, the US banks function much more as an originator and a distributor of the loans, while the Euro area banks hold them on their balance sheet. And that is really due to a much less robust securitization market, first and foremost. But there's also some very important institutional and regulatory differences between the EU and the US, including the role of government agencies, especially related to mortgages, where we have the structures of the Fannie and Freddie that help to facilitate that difference in how the balance sheets are brought about. But with respect to the specific role of securitizations, the bottom line is it frees up banks' capacity to channel lending to the real economy. It allows risk to be transferred off of the balance sheets of the banks and to be transferred to the investors. And when exposures are securitized, banks may be able to release regulatory capital and in that way continue to put that capital to work, lending to the real economy. There are important constraints in place for prudential reasons. Capital releases, of course, can only be released if the securitization transaction that a bank is undertaking meets the significant risk transfer criteria, and that's prescribed in prudential regulation for very good reasons. We see from the ECB the opportunity that SRT securitization transactions can offer to banks, and from that perspective, we're very ready to support the development of the SRT market, but we have to make very sure that the risk transfer is taking place both at origination and over the life of that transaction for individual bank risk reasons, but also for overall financial stability reasons, as we have learned from some of the past issues that are there. Let me give you just a very, very brief overview of some of the market developments of the significant institutions within the SSM and what we're seeing with securitizations. Over the last 4 years, the number and the notional volume of the SRT transactions have increased both for performing and for non-performing assets. And while the securitizations of performing assets pursue capital release, securitization of non-performing assets is geared to clean the balance sheet of the bank. And we've seen very significant steps taking place across the euro area that have been very positive with respect to the cleaning of balance sheets coming off of the legacy of the great financial crisis. A significant majority of the performing asset SRT transactions are done in a synthetic format, while most of the non-performing SRT transactions are done via cash transactions. And during this period, about 29 significant institutions were active in performing transactions and 13 in the NPL transactions. The notional volume reached 136 billion euro in 2018, 124 billion euro in 2019. And yes, this was said at the outset, due to the pandemic, issuances indeed did decline to 95 billion euro in 2020, picked up again slightly, reaching 104 billion in 2021. And again, synthetic transactions account for most of the performing transactions. That's around 70%, with a capital benefit of euro 4 billion, which is 40% higher than in 2020. And in non-performing securitizations, and I've said how important this is about cleaning the balance sheets of the banks, the notional volume reached a record high of 60 billion euro in 2021. And that's following healthy volumes over the last few years. So I'll just conclude here by saying very clearly that we certainly support the role of securitization in the financing of the economy. And this has to be linked, of course, to prudentially robust and risk transferred securitizations, that they follow this format. Thank you.
Thank you very much, Elizabeth, for those remarks. And you discussed the comparison with the US and also the importance of SRT and the latest developments there. And I think we might come back to some of those points. Let's turn now to the colleague from the Commission. So we're delighted to welcome Anne Schädle, who's the head of unit for policy definition and coordination at DG FISMA. The Commission, it goes without saying, is a key player and has been one of the drivers, I would say, of the improvements that we have seen in the regulatory framework and the positioning of securitization as part of the CMU. That's been part of the Commission strategy, which is very much welcome. And I think importantly, in the response to the pandemic, we saw the Commission putting securitization as part of the solution, with amendments in relation to the non-performing exposures and the new framework for synthetic securitization. So it was important to show that that emphasis in responding to the pandemic. So and I wanted to ask you, 3 years on, how does the Commission kind of currently assess the performance of the framework? And of course, the Commission is currently embarking on a review of aspects of the framework. There have been consultations. There is a call for advice to the ISAs on the prudential framework that we're going to discuss later on. So what can you share with us in terms of your current thought process and next steps expected?
Yes, thank you very much for inviting me to speak here. A lot what my previous speakers have said, we would really emphasize as well that we see securitization as a very important building block in CMU and allowing banks today, or the industry rather, to diversify away from lend from bank funding only, and to get funded more via the capital markets and to strengthen the capital markets union. Where maybe I say a few words on the review we are currently conducting and where we stand with it. And maybe first of all, as an introductory remark also, I mean, we do see that the securitization market has developed less well in the last 3 years than we had hoped when we put the framework out in 2015, and then when it got applicable, of course, after long and difficult negotiations with co-legislators in 2019. Partially, and it came also across in the introductory remarks, it's a bit too early to say why, if let's say the subdued development is really due to the regulatory development, or maybe more due to monetary policy, where the liquidity which was given with the monetary policy instruments rather allowed for a cheap funding of banks, where they didn't have to really resort to securitization for funding. So it's difficult to say on where the reasons are for where we stand now, and that the market hasn't developed so much. Altogether, we are very supportive of it. You have mentioned also the capital markets recovery package, where we, during the COVID crisis, after the first half year of the pandemic, put on a proposal on STS, on synthetic securitizations, and also for NPL securitizations, both of it, to allow it and to facilitate it much more. So we think that was a very important step forward, and Elizabeth has also reported on how much this has gone up in the last year compared to 2020. So once the framework was in place, we think it has really helped. What we also see is still that there is a stigma on securitizations, especially on the when you would see how a possible negotiation with co-legislators would go, and that we see that Parliament often has still very critical views, and it is not easy to go forward with something to loosen, in a way, the framework. So this is all considerations we take into account when we now do the review report. On the report, you mentioned that we did a consultation last year. We are at the moment writing the report. It should come out beginning of September, if all goes well, possibly even earlier, but let's say, I mean, September seems a quite safe bet there. The feedback in the consultation, just to give some preliminary feedback on that, it's that that market participants think that the framework works quite well. It's a robust framework. Of course, we see complaints about proportionality and about compliance costs, or that some disclosure rule or due diligence rules are seen as quite cumbersome. But that overall, the framework, I mean, the industry works with it. It's adopted, and it also continues to be filled in with level 2 standards and with delegated acts, where this will certainly still helps to the framework to bring it to life. We had maybe a word on the prudential side, because we see that as a lot on the, I mean, the pickup of securitizations has, on the one side, of course, the regulatory framework from the securitization regulation, but we probably even the bigger impact and the bigger influence is on the prudential side and the prudential treatment. At the moment, we are still waiting for a call for advice, which we have sent to the Joint Committee of the ESAs to look at the prudential framework. It's also in the capital in the CRR, a mandate to assess the framework. The advice is meant to be delivered to the Commission in September, and at that point we will need to see how we take it forward. It's maybe also interesting that it's not only addressed to EBA to look at the prudential requirements for banks and prudential treatment, but also to EIOPA to see if anything can be done to change the prudential requirements we impose on insurers for the investments in securitization tranches. We saw that over the last 3 years, rather, the investments of insurance companies into securitization, so as an investor, rather went down. So this is, we need to see how this feeds into, then it's not the Solvency II regulation itself, but it's for a delegated act which would need to be amended there, but there we also depend on the call for advice and the outcome from there. On significant risk transfer, of course, there is an EBA report which was delivered last year, and we will revisit it in autumn and prepare for a delegated act for that in autumn, together with, I think we take a more comprehensive and encompassing view both on the SRT delegated act and the capital requirements, and see what the EBA report says, recommends, or the Joint Committee report recommends in this respect. I think that's so far from me, or maybe a few words still on green securitizations, because that was also mentioned that securitization should play a role in the green transition and has to play a role in that. You will have seen that the EBA has published a report in March on the green securitization framework. We are now at a stage, and that's what the EBA also recommends, that this report for a green securitization framework should rather feed into the ongoing negotiations of the EU Green Bond Standard, rather than coming up now with a separate framework which would amend the securitization regulation. We support this, and we encourage the co-legislators to take the EBA report into account. There are, of course, two elements to it. At the moment, the EU Green Bond Standard, the proposal from the Commission, foresees that the assets which are securitized have to be green or taxonomy compliant, whereas EBA rather recommends that we should look at the originator and look at the way the originator uses the proceed it gets from a securitization, so that these proceeds are used for green purposes and green projects. From our side, we do see the difficulty what EBA has analyzed also, that at the moment the availability of green assets for securitization is, of course, rather limited, which makes it difficult to really look at that the securitized assets only need to be green, because that in a way very much restricts the market development and what could be in green securitizations be done. So it will be for the co-legislator to probably look in the direction of some transitional phase or some phasing in, how this two requirements, if it's a green use of proceeds by the originator or the proceeds or the assets which are securitized, they need to be green, to find a balance between these two elements. But at the moment, we really are supportive that the co-legislator build this into and have a look at the EU Green Bond Standard, what can be done in order to make this system work there. But that's all from me for the time being.
Thank you very much. And you mentioned many important points, but I pick up on the last one on the green transition and the green bond standard, which is currently under discussion. And it's a good segue to turn to the country holding the presidency, who's leading the negotiations at the moment on this and many other files. So we're delighted to welcome Sebastian SCHÜTZ, the head of financial sector department at the French Trésor. And I wanted to begin kind of asking you about the big picture, Sébastien, because your presidency has placed a lot of emphasis on the CMU and the concept of strategic autonomy as a sort of an important concept in the EU's financial services strategy. So I wanted to begin asking you how you see securitization fitting into that picture of Europe's financing model. And also more specifically about the green transition, because it's the priority for all of us. You can comment on the green bond standard, but more generally, what role do you see securitization playing in that huge effort that we need to make to mobilize resources?
Thank you very much, Pablo. Thank you to AFME and Paris EUROPLACE for organizing such an event. And thank you for the questions. So first, we have emphasized the concept of strategic autonomy, not only in financial services, but for Europe and to strengthen the feeling of belonging to Europe. And we think it's all the more relevant now than when we have started with this concept. So what we have said then at the French Treasury and with President and Minister, of course, that it's also the case for financial services, because that's the mean to fulfill the broader concept of strategic autonomy. If you want to finance green transition, you need to rely on what you own first, before trying to count on others. Second, if you want to compete with US, Asia, you need to innovate, you need to finance innovation. And for this, it's also good not only to rely on US or Asian funds, but also on European funds. And last but not least, defense. So, I mean, you have the case for sure. And you have the financing needs. We know that they only increase. Elizabeth McCall has recalled the figures by ECB. You have the figures by European Commission. We take that to account and we say, okay, what can we do to achieve this huge amount of investments? We know that public finance will be limited. And so we need to count on private finance. And we know that banking system or bank balance sheets cannot do everything. And so we need that. It's very easy. And that's why, regarding capital market union, we have really emphasized the C. We need capital. With capital, we will develop markets. They will function better, smoother, and so on. And then the union will also come because market participants look for efficiency. But that's probably in that order. So first, bring capital. So we were delighted during the presidency to have to deal with the Solvency II review, with the LTIF review. We would have been further delighted to deal with securitization, but that will be for other presidencies have to share the goodness. So no problem with that. And as a member state, then we will be glad to support any effort to revive the securitization market. And for us, it's of course key. When I say that the emphasis, in our view, has to be on C, the way to put C, you have capital from savings. You know that European savers are not really as keen as going to equity as some other savers around the world, like banks. Very good. You have to count on your strength, and so if you can put things out of the bank balance sheet into capital markets, fine. Of course, in a safe, robust way, for sure. But that's our common work with ECB, Commission, and member states in Parliament. So bring more capital, revive securitization, and here, second very basic thought. The ECB and Bank of England in 2012 or 14 have made a very bold call for a revival of the securitization market. It was only 4 years after the great financial crisis that was very bold. Is there any reason to think that this call, this bold movement at that time, we don't know to be restated? My view is on the contrary. You have mentioned the figures. So the market has not really revived. The needs are increasing really fast, I would say. So there is a stronger, even a stronger case for such a call. And I would say it would be important to have it again. It's a call to Elizabeth, to ECB, but I believe the voice of ECB in that regard is really very, very important. If you have such a renowned supervisor saying that it's important as it was 10 years ago, that would have a great benefit towards many member states that maybe have not yet done this thinking. So that's the first. Second, on regulation, of course, you have many things to do, but I would say STS framework was done. I'm not sure that you need to revamp it. Maybe you need to streamline it when it's necessary. So we have discussed about disclosures. Maybe you can streamline it a bit. Of course, you have the prudential requirement issues. And here, it's not about being less safe, but just to say that market participants compare. And so if they have other alternatives that they see as easier and less costly, so on, they will go towards that. So if securitization is not riskier as these alternatives, then there might be a case to review some prudential requirements. In that regard, and that's my last thought, it's maybe not that much about banks, but more about investors. Because what we have seen is that there was no broadening of the investor space. What I see when discussing with, for instance, life insurance, that they have lost the knowledge. They have lost the teams knowing how to invest into such products. So, I mean, it's not just about trying to have the perfect regulatory framework. It's really to make the market revive and to have the people knowing how to make this market function. And for this to happen, to have the investors interested again in such products. So that's really a collective work that we have to take, but it's worth it.
Thank you very much, Sebastian. Several important points there. Particularly the last one around recovering the expertise. And we've seen that decline, for example, in insurance company participation, and that's not something that is revived overnight. It takes time to rebuild that expertise. And you also spoke about securitization being present only in a few member states at the moment and have a developed market, and other member states have yet to develop their securitization market, and that could play a valuable role there. Let's turn now to the private sector, and we're delighted to welcome José Luis de Mora, Group Senior Executive Vice President of Santander, CEO of Santander Consumer Finance, and Group Head of Strategy, Corporate Development, and Financial Planning. Thank you very much, José Luis, for being here. Santander Consumer Finance has been one of the largest issuers of ABS in Europe. So how does your institution use securitization, and with what objectives? Funding, capital management, risk transfer. We would welcome you to share some of that usage that you give to securitization, and also in terms of ESG issuances. What role do you see securitization playing there?
Okay, thank you, Pablo. Well, first of all, thanking Paris EUROPLACE and FISMA for organizing that. Great work from Mr. Lemire. So everything I was going to say has been said. Anyway, on Santander Consumer and the use of securitization, Santander Consumer is basically, for those in France, something similar to settlement. So it's basically a credit origination portfolio with little funding. So we have some deposits, but we extensively use the capital markets to fund the credit. And securitization fund about 1/3 of our balance sheet. Okay, 50% of that is for funding, 50% for risk transfer. So it's extensively used. Within the Santander Group, we are the largest issuer in the securitization market. I think Santander probably is the largest securitization issuers in Europe. So for us, it's super important. It's not only a funding issue, it's a risk issue, as Mr. Lemire has said before, sharing the risk transferring, because that's efficient for capital. We also have a bank and a consumer finance company at the other side of the Atlantic. And apart from the monetary policy, which is also a factor, one of the key factors that make American banks more profitable is their capacity, the ability to turn on the balance sheet, the velocity of the balance sheet. That's for investment banking. That's also for mobilization of credit consumer. So how many points of return on equity? 2, perhaps. Yeah, that's something that is difficult. Now, we in Santander Consumer, we are aggressively pursuing securitization market. And for instance, in the last 18 months, before the invasion of Ukraine, we've seen one of the best periods for securitization, and we have been aggressively doing risk transfer. Here I have our CFO. And it has been a great market. We thought for a while that it would last, but actually 3 months ago it stopped. It stopped abruptly. We basically pull out a couple of securitizations in the market, because the price were extreme. The price swing has been extreme in Europe. In the meantime, at the other side of the Atlantic, my other colleague has reminded me yesterday, we were issuing 2 billion of securitization, and the demand, it will have to be extended to 3 billion because there was too much demand. So that's the contrast between the US and Europe. I can see as an operator in Santander Consumer, and I see at the head of the strategy in Santander, how the two worlds, and we, for us Europeans, now I'm elevating from Santander Consumer, from us Europeans, we cannot let that happen if we want to be competitive in the medium term. We see that situation every day. Now the question, as Mr. Lemire was saying, why is that happening? It's not because of the lack of funds. We are a current account surplus block, so we have more funds than we need. I mean, the US is a current account deficit block. So why they have such a wide and deep capital markets and we don't? Because they attract capital from other blocks that are current account surplus, including Europe, including obviously Japan and China, etc. And they do because they have a very attractive capital market. Why it's attractive? Because there's a lot of people willing to go to that market, and therefore has liquidity, and therefore have clear rules, etc. So I think from a big perspective, and as an operator, Santander Consumer, we would need to have capital markets like the US capital markets in the securitization market. That's also important for us from an operating point of view, but that's also from big policy, as been said here, important to finance the European economy in the medium term, the green economy, the digital economy, and all the infrastructure has to be done, and all the normal investment has to. Also being said, banks balance sheet cannot finance everything, especially have limitation on capital, etc., etc. And therefore, securitization is one of the key things for having that capital market union. Securitization would be my priority as both operator and strategy for Europe. What can be done? I suppose there's a lot of more people that know better, but apart from having political effort, the stigma issue on securitization has to be removed. A lot has been said. I think a lot of rules can improve. Having the securitization as a useful asset for liquidity ratios would help a lot to people holding those assets, making it more attractive for Solvency II for insurance companies to hold those assets. Has been also said that the insurance companies are the biggest holder of savings in Europe, unlike in the US. So making it attractive for them is very, very important. For ESG and green bond financing, we could do for green bonds, being called green bonds, even if they are based on brown collateral, if that the funds are going to be invested in green. And obviously we need the commissions to push for a clear framework. So all those things have to happen, but eventually what we need is a capital market as in the US. Because that's the core advantage of the US versus Europe and independence of Europe and et cetera, et cetera. So from a bottom up and from a top down perspective, I'd say this is key. Thank you.
Thank you very much, José Luis. Some very important points you mentioned there on competitiveness on the European sector and the green transition. So we'll come back to those. Let us now turn to Sebastian Schutz, who's the head of the Capital Market Strategy, Financial Market Monitoring, and European Asset Valuation at the Bundesbank. Of course, securitization plays an important role in Germany. We'll hear later from Volkswagen Financial Services on how they use securitization. But I welcome your reflections from a central bank perspective. How do you see in the current macroeconomic context with the challenges Europe is facing, the contribution that securitization can make to the financial system, and specifically the funding of corporates and SMEs, the real economy? How do you see that securitization helping there?
Yes, thank you very much, Pablo and Arnaud, for the invitation and chance to speak here. For me, this is really a matter of heart because 15 years now I'm dealing with securitization, and from my personal feeling, we have talked a lot in the last 10, 15 years about the quality of ABS, but we have not seen the improvements that we hoped for after the financial crisis in terms of market development. And I think that especially having a look at the challenges we are facing now, we are living now in a different world than last year. We have high commodity prices. We have maybe a new kind of uncertainty that we are facing with focus on defense. We have strong inflation in a lot of countries, and in many countries also different monetary policy framework. So it's a different world now, and I guess that the stigma that you mentioned is still alive and very, very strong. That's the things I hear. If you talk to ABS specialists, if you find someone, then you see that they know very well about the risk of ABS. If you talk to policymakers about CEOs of local banks, and still there's a lot of fear about securitization, and I think that's one of the key issues. I very much like the title of this panel here about last call. I think it's a last call for climate. It's a wake-up call for policymakers for securitization. We are facing a lot of financial demand for for being able to do the transformation of the economy. And I think that the transformation is a necessary step for independence, for our own strength, to build our own face in the world. And as Economic Minister Habeck said in the last days of the G7 presidency, he said we have to rethink globalization and not to prevent it, but I think we have to rethink quite a lot about how we want to move on. And regarding capital markets, I had yesterday a discussion about private equity and venture capital, and that we are missing a European market for the pre-IPO phase, where a lot of money comes in from Asia and the Anglo-American area. And we are wondering, why is this happening, even though we are maybe not facing regulatory constraints? And I think that we need to live more capital markets in Europe. So I think it's important to understand also in terms of relative value securitization. And for me, always the discussion is very much focused on the business case of different funding and investment alternatives. And I think without being too bold here, I would say it's quite a complex issue to originate or invest in asset-backed securities, which is maybe possible for a lot of big banks, but for smaller banks, it's already an issue. I talked last week to a bigger German bank that they want to do an SRT transaction, and they said, oh, you know, it's very, very complex. We have to deal with a lot of requirements. We are first time doing the supervisory process, which is also not that easy. And we need to hire another bigger bank to support us, because otherwise we probably won't manage it. And this process will maybe last 2 years. And so we are done. That's compared to an issuance of a Pfandbrief, quite a big thing. That's why I think it's important to also get this message to policymakers. And my last point is about stigma. If we think about capital market union and about financing the transformation, we are talking a lot about green bonds, sustainability-linked bonds, and I think it's very valid and good that these instruments are there, but we should not forget that, for example, in Germany, 99.8% of the companies are SMEs. And if you tell them something about sustainability-linked bonds, they look at you in a kind of way that you are living on another planet. So maybe we should also think about, if banks are not able to do all these loans for transformation, what can we do to spread the knowledge and to find possible platforms that also small banks can distribute their loans into the capital market, because the investor demand is there for SME loans for transformation. We see a lot of demand there, and I think that's also important to understand the scale economics, that we also need to think about how we can spread the knowledge and put a framework together that acts as a catalyst to help small banks distribute their loans, of course complying with all regulatory rules to the capital market, because otherwise it will be still just a game of very big and there was a very small number of banks. Thank you.
Many thanks, Sebastian, for those reflections. And you mentioned the complexity of the SRT process. That's something I'd like to come back to. And also a couple of times you talked about stigma. And maybe it's a kind of a follow-up question for you, José Luis, you know, the question around stigma, because, you know, it's been more than a decade since the global financial crisis. It's been repeated to death that in Europe we did not have the problems of the subprime market. European securitizations performed well. So in your, obviously your institution is a big issuer, but you know, in your dealings with investors and with other market participants, is that kind of a stigma still very much present, or have we moved on from that?
No. I think the stigma is more in the public arena. I think I don't want to say politician, etc. That's a different thing. No? But I think we have to convince our legislators that we need to advance here, because the stigma, actually the story of securitizations in Europe are of an excellent track record. It's almost no credit loss. So from that point of view, we should remove that stigma and complex that it was in the US, because it was in the US, there was a few things that not were done. Not in the majority of cases, but in some cases, especially in the subprime. The subprime segment in Europe is non-existent anyway. So anyway, the important thing, the track record of the European Securitization has been excellent over 20 years. So remove the stigma from the bottom up. Top down ideology, I don't know. But I mean, the reality is shouldn't be. The second thing, which I think is not only a stigma, the important thing is to have a strong pool of investors willing to buy European securitizations. That's the issue. I don't have the answer. But to do that, we have to have a good capital market, liquid, and people go to the liquid places. If there's no liquidity, people will not come here. And this is a self-fulfilling prophecy. If we convince people to come, there will be more liquidity, and the more liquidity will be more people. How much European funds are invested in the US securitization market? Why they go to the US securitization market, not to the European securitization market? There must be reasons. Reasons about the rules. Reason about the here we have 17 or 18 markets with a slightly different rules, etc. So we need to integrate the market. We have to have more liquidity. We have to have more clear rules. I'm not a completely expert here. I'm surrounded by experts, but we have to copy and try to make of the European market a US kind of market. There's not a scarcity of money, but we are sending our money outside. And this is the main thing. I mean, when we place, I mean, as I said, in the last 18 months, there was a lot of liquidity in the market, courtesy of the EC, right? And now the market is trying because change of the monetary policy, also Ukraine, etc. That doesn't happen in the US to such an extent. And if it happens, it comes and the liquidity comes back very quickly. Okay, so we need to try to look at the US as an example and follow that. That's for me the main thing. I mean, the stigma, could be in the minds of some people. It is not in there. The other problem is the real.
Thanks for that, Luis. Let's turn to our participants in virtual format. And Elizabeth, I wanted to follow up with you on the question of SRT, which has come up a few times, and you also offered some remarks on that. Participants have referred to the complexities of the SRT process, which is of course critical for the institution to release capital. The SRT assessment is crucial in that regard. So have you seen kind of improvements in how that has evolved in the recent couple of years? And from the EBA's report, Anne mentioned that the Commission is going to follow up on that in the autumn. Do you want to see? Do you embrace that, support the recommendations of the EBA, and what would you like to see in that report?
Thank you. Thanks for the question. First, let me just say up front, it's very important to us to receive feedback from market participants, from the industry. I think I've made my personal point of view and the point of view of the ECB quite clear that this is a market that we would like to see develop, and we're very much behind creating more depth and breadth in the securitization market, and also adopting the points in the action plan, the CMU action plan, so that we can head in that direction. But if there are impediments that are existing, we're certainly very open to understanding any impediments that we may unintentionally be putting in place. Having said that, it's in everyone's interest that there is an appropriate process to make sure that the SRT assessments are performed to a sufficient standard. And it's true that there were challenges in the beginning with the adoption of the banking union in putting these assessments in place, but through market dialogue, we've gotten very strong feedback that the SRT transaction process has matured. It's yielding an assessment process that's well understood by the banks. We supervise the compliance with the SRT criteria for all directly supervised institutions which engage in SRT securitization transactions. We've got a process where banks are required to notify the ECB at least 3 months in advance of the expected closing date. And after that, we begin the process to make sure that the significant risk transfer is actually met. We want to make sure that that's in place not only at the origination, but also over the life of the transaction, including in crisis conditions. And this is important for the quality of capital, that's in place appropriately. Really, I think one of the key things with this SRT process is that the process that the EBA puts forward and the process that the ECB follows is something that the banks can understand and that is predictable. The predictability of that process, I think, is absolutely the key component to having that in place. Very much looking forward to the report and also to any industry feedback or other feedback about any ways within making sure that we review these to a sufficient standard that we're doing that predictably and appropriately and promptly. I can elaborate a little bit more also, on some of the learnings from the past. What part of this process of making sure the risk transfer takes place, it's fundamental that you understand where the risks are in the transactions. And, we all lived through the subprime crisis. When you look at some of the security, and there were many reasons why the subprime crisis occurred. So there's not any one explanation for what happened in the financial crisis, I would say. But one component was the securitization of the mortgages, the subprime mortgages. And, looking at the provisions there, if you look through the prospectuses, there was one provision that required the institutions to replace any of the loans that were not meeting the lending criteria that were in place, up to 5% of the overall portfolio. And of course, that particular provision failed in the financial crisis when you couldn't replace the product with appropriately performing product. So, this is, just to give a little bit of an explanation about the complexity that's there. This is the kind of thing that has to be looked at for the risk transfer component. And hello to the main room. We continued speaking a bit. So I hope that we've answered your questions.
Yes, thank you very much, Elizabeth. Yeah, we lost you for a moment, but I think we heard the remainder of your remarks, and the recording will also be available. So thank you for that. Sebastian was just discussing the green bond standard and concluding an intervention on that. So I give him the floor again.
Thank you, Pablo. No, just to mention that we hope that the issue can be solved during the trilogues. But what I can confirm is the issue is well seen by the Council, and I believe that there is an understanding that the use of proceeds way is good, at least for the coming years. Just one broader word on that. Of course, there is still a stigma at the public politician level, in the parliament, council. It's always hard to talk about securitization. I'm not sure that we should only focus on given types of securitization, and in particular green securitization. So, that's important if it helps decrease the stigma. But it can also have as an effect to increase the regulatory burden, the disclosures, and so on. So, it's a delicate balance. I believe that we should keep that in mind because there is a risk, in my view, that's a personal view, that in the end we end up with a regulatory framework enabling still smaller pot of securitization than today. Just let's also work on the general case for securitization. Thank you.
Thank you, Sebastian. I'll give the final word to the Commission, but before that, Sebastian Schutz, coming back to you. You spoke about a number of issues, and one kind of question I had was, the question of strategic autonomy, which is, one Sebastian referred to. How important is that, from a European perspective? And we often talk about securitization as a way to facilitate risk sharing through the private sector. We have limits to how much, let's say, sharing of resources can be done through public sources, but the private sector is there, and investors in one member state can invest in securitizations from another member state, and that's a form of risk sharing. So I wanted to, ask you about the role that you see securitization playing there as well.
Yes, thank you. I think one thing that sounds like kind of paradox, but makes a lot of sense for me is that if you are looking for certainty, you are often ending up with uncertainty. And that you can always try to close every risk. That's my personal opinion. But at the end, capital will find its ways. And there was also a publication by the BIS in the last month about thinking about the role of market dysfunctioning and the role of NBFIs. And I think that it's very obvious that also if you put one stone to the left side, something will happen on the other side. And that should not be forgotten. It's not a one-dimensional issue that if you close one problem, that then the risk is gone. It will find other ways in capital markets, and so I think that's a very multidimensional complex that has to be taken into account. And regarding the strategic importance of securitization, if you are looking, for example, and I think it was 2 or 3 years ago, where there was a message from the Japanese supervisor that one bank was regulated because they were owning more or less 25% of the US CLO market. So it's not about the attractivity from a worldwide perspective of securitization. And also, if you look on a currency hedge perspective, it makes a lot of sense for Asian investors to invest in European markets, and they are doing, but not in securitization. So the problem is, where's it coming from, and what can we do to improve? And I think that's a very important point for CMA, that we need to think that we need to come to one European market and to have a common European understanding, and to also maybe get less of national rules in place, so that we have one view from the outside. Because if it's getting too complex, capital will go elsewhere. It's also, if I talk to companies why they are choosing the US for public offerings, there are not really hard facts in terms of this law or this tax is complicated, but the answer is often something like, if I go to New York and Boston, I will find 500 investors and specialists in one place, and in Europe I don't. I have to do a lot of visit different cities and places, and I think that's a dimension that we have to think about beside of all regulatory aspects, that what is the outside perspective from an investor, and then we also need to take into account what are their demands, and then we maybe find within all regulations and different complexities we are facing as European Union a solution that maybe works also for all of us. And with this broadened capital market access, we can also then finance the needs for strategic topics like transformation or independence.
Thank you, Sebastian. I think we all agree about the emphasis on non-bank investors and understanding their needs, their motivations, and how we can get them to return to this market. Before giving the final word to the Commission, I wonder, are there any burning questions from the audience to any? Steve? Yeah.
I was going to ask a question.
I didn't.
Question for Sebastian. I know you were involved in the aspect purchase program with the ECB. what has that experience told you about the quality of European control? Are you happy with the book? Has it performed well? And how can you share that experience with the regulators and the policymakers still in Stigma?
Yes, thank you, Steve. That was a very hard discussion at that point to build this program up. And I think also one component was also to not stigmatize asset-backed securities at that point of time, because that was a very sensible moment. And a lot of central banks at that point of time had no experience with asset-backed securities. And I think it worked quite well from my perspective. Yeah, people were used to it. I remember calls that we had in the very beginning, like, what's the discount margin? What role does it play for pricing assets? And it's some kind of learning effect that people get used to these assets and understand this quite well, and the dynamics, and also that compared to credit, you do not have any discussions in the senior tranche about defaults or something like this. So I would say overall it worked quite well. Of course, every asset class from every country has its own issues, but overall, I would say it's from the fundamental economics that this program has. I think it was a good step to have this on board, and I think that having a look into the future about these programs, it should be very carefully anticipated that it's not a stigma if some of non-standard measures will end at some point in time, whenever this will be.
Thank you, Sebastian. Let's now turn to the Commission for the final word, and welcome your reactions on points that have been made. And I think one question I would have is, where do we go from here? What you can share in terms of next steps. You've already told us a bit of that, but of course we have the call for advice from the ESAs on the prudential framework due on the 1st of September. We're also mindful that we're well advanced now in the Commission's mandate, the window is closing in terms of the ability to table and agree new proposals within this mandate of the Commission. So, welcome your thoughts on what you see could be done within this mandate, and how you see also the dynamics with the Parliament and the Council, which you mentioned as well in your opening remarks. Thank you.
Yes, so maybe first on the prudential side, we wait for the call for advice, the results from the Joint Committee of the ESAs, and then only it will be decided if and what we do, and if it's decided to do something, let's see what they recommend and what then the political decision is. Then the question is if it would be a separate proposal or rather be part in feeding into negotiations of the banking package. I mean, this is always an option as well, and then you are much less constrained of this thinking of we are coming towards the end of the mandate, but frankly we are not that close yet. I mean, internally we are still planning proposals until Q1 and Q2 next year, so this is not it's not really yet the end of this college and this parliamentary term, so there's work ongoing. And we will come with proposals as well. So that's not, we don't see it really that this is now the end and it's under time pressure to come create with proposals quickly. On the securitization framework, on the regulation itself, I mean, our current thinking is rather at the moment of not coming with a proposal entry or with changing the framework now, but rather to work on disclosure templates to facilitate and take the criticism into account what we hear from the industry, that some templates may be too detailed, and that we We rather need to see, for example, in private securitization, what is useful for the counterparties, what is useful for the investors, and not to mandate too much. But for changes like this, it's not really necessary to go into a change of the framework, which is a much more cumbersome and longer process, and you don't know where you end up if you start negotiating, and you may have other demands coming in. So it's in a way careful to think about what you wish for, if this is really where you want to go. And when we look at the consultation, there's also not, I mean, on the feedback is often not so clear that if someone says, yes, there is a problem somewhere, but the proposed solutions go in very different directions. So it's not clearly easy to say, well, this is the way forward and this is the way where everyone will agree. That's why we think it's better to go on a more incremental way and look at what can be fixed like this. The big tickets on synthetic securitizations and NPL we brought forward. I mean, this would have been otherwise part of a review, and this was advanced. We had a very good EBA report, so this was done at the beginning of the pandemic, and I think that made already a big impact. So at the moment we don't. I mean, I cannot fully preempt the report, but the Commission will adopt and to go forward there. But at the moment, we rather see it working like that. And this is also, I mean, it's not an issue of the mandate closing. Of course, we have many files ongoing. FISMA is a very a DG which has put a lot of proposals on the table, and they need to be processed in the Council, Parliament, and in trilogues. But it's not the main reason of not doing something. It's rather based on the substance on our assessment so far.
Thank you, Anne. So there's still time within the mandate, so that there's a hope there. Thank you for that. And you mentioned disclosures and the work that can be done level 2, and we'll hear later in the afternoon from ESMA on that subject. And I also welcomed Sebastian remarks on the green bond standard. That's very much on the table, and you know that the EBA report is being looked at. So we look forward to the conclusion of that debate by the Czech presidency. So thank you, and I now hand over to Arnaud, who will thank the speakers and the host.
Yes, thank you to everybody. Very interesting session. We have understand two major things. First, the importance of the financing needs for the coming months and years in the context of the present crisis. Sébastien has underlined, Sébastien RASPILLER has underlined the way we needed to accelerate the private financing, because the public financing will not be able to cover all these financing needs. And my first question to you, Anne, and the European Commission should be to know if we have some macroeconomic views on the importance of the needs for the future, and the way the securitization can be one of the channels to respond to these financing needs. Who would be interesting to discuss this point with you. Second, I've been very interested, Elisabeth and the representative of the Bundesbank, by the way I see that ECB and the Bundesbank are progressing on the analysis of the disposal which must be implemented, and the question of the distribution of the risks. We have heard your comments, Elisabeth, on the comparison between Europe and the United States on this subject, and we know that there is also a question of competitivity. So these are the major lessons of this first session, in my view. So I would like to thank very much everybody, and Pablo for the very good management of this session. I would like also to thank Linklaters to have welcomed this conference today. Linklaters, which is one of our members of Paris EUROPLACE. Thank you very much to you. I know that there is some representatives in the rooms. And now we will give the floor to Sean Badley to moderate the second session. Thank you to everybody.